Hey, good afternoon, everyone. This is Trader Tim coming to you from EminiMind.com. And in this video, I wanted to talk about a couple of trades from today. I made a little bit of a mistake on my first trade, and so I wanted to walk through that because it's probably something you've run into before. But the first thing I wanted to talk about is next week. We are going to have the Fed meeting Tuesday and Wednesday, so the meeting announcement will be Wednesday afternoon, and the June expiration on Friday, which means this Friday, the front month for the ES or all the futures contracts will be September. So make sure that you are trading the correct contract. Pretty much everyone on Friday should be trading September. The like if you're on Thinkorswim backslash ES, we'll put the front month. We'll put that September contract as the front month on Friday, so you don't have to do anything there. But if you're trading another platform, something like Infinity, where you have to go to the drop-down menu and select the trade ladder that corresponds to the contract, make sure you jump to September if your Thinkorswim charts are on September. So just double check that on Friday. Otherwise, yeah, you're looking at prices going, why is my trade ladder so much different than the chart? It also makes things a little bit screwy, those expiration weeks, because you have, even though the new front month, so the September contract will have more volume, it's still, there's still a split between some of traders that are either rolling positions or still trading the prior contract, so the June contract. And sometimes, screwy things can occur and the market might seem a little bit sloppy. So you pair that with the Fed meeting announcement on Wednesday, and Wednesday and Friday are probably two good days to take off. Really, next week, Thursday is the day that I'm expecting some good trading opportunities. So at best, tread lightly and don't try to you know, overthink things or overtrade next week because there might be some screwy things going on that are just chalked up to what's going on with the Fed meeting and the expiration on Friday. So be careful. An important point that we are at on the daily chart is we're coming to the halfway back long, and this will be the first halfway back long after breaking the swing high back here on the 17th of May. So that would be this 40.89.75. We broke that. We moved sideways, kind of this bull flag situation, consolidated. Now we're getting that pullback to the 50%, right around the 4,000 level. So I'll be looking tomorrow, if we can drop down a little bit more, to get long, possibly a couple of swings. Tesla already made its touch of the 50, so that's kind of already in play. I would close that out if we closed below, we'll call it 685, below the 61.8. But as of right now, that's holding just fine. But if you go to some of the other, bigger, the FANG stocks and some of those names, and you look at where we are at, coming down to the 50% retracement and broke the swing highs, you'll see is the pattern on a lot of these names. So if you want to put some swing trades on, that would be the place to do it. I'll also add to my long-term VUG position, likely tomorrow if we can make it down to that 50% retracement. So bigger picture play coming into play tomorrow with that halfway back long. Notice we also did not touch the 50% short, the 42.19. So that's also pretty bullish. If we had come up right to the short and then sold off and went straight down to the 50% long, now you've got a lot of shorts that jumped on, and sometimes that can just blow you right through the 50% long. So if we were to go through the 61.8, let's say tomorrow we open up, gap down, and just sell off hard right through the 61.8, then more than likely we'd be able to come down here and double bottom or make our way back down to lows. But at this point in time, volatility, that VIX number here, still not climbing like you would expect if there was a lot more fear in the markets. You can draw the bottom edge of the triangle here. We'll just do something like that, run it through some of these lows here, and we're still well off kind of the top of the triangle, let alone breaking some of these swing highs. So keep your eye on the VIX. If we are moving down in the S&P, but the VIX is not anywhere near, say mid 30s, I would be watching for some of those intraday reversals that we tend to see. Okay, let's get to today's trade. 2 trades today. I didn't really have much else this week. You can go both this week, well, all the Tuesday trades are archived in the live trading session in the dashboard. You can see there. You can also pull up my trade log in the dashboard. And I really didn't have much at the end of last week. I was doing some house projects, and then yesterday didn't really see much. We were mostly in an intraday triangle on the morning session yesterday. If we look at that real quick, that was up here, this big kind of series of higher lows and lower highs yesterday during the morning session. So didn't really make it up to the top of the 30-minute range for a short or the bottom for a long before the session expired. So didn't have anything yesterday, but today let's start. Well, so 2 trades. We opened up a little bit of a gap down and then went up and filled the gap. Anytime we fill the gap, that's a good place to look for a reversal. So that's kind of what we had today. We came up to fill that gap, the prior day's close there. I'm going to mark the top of the 30-minute range here. At this point in time, the first time we came up and filled the gap, we were just shy of that 30-minute mark. We came up and made a double top and then sold off a little bit, kind of made a double bottom, rallied. You could call it the triple top. Then we came down and broke the swing low. And so I put on a short here, like so. And, by and large, so we did have a high tick, which was a good sign. And then at that point, we were pretty close to the 30-minute mark, couple minutes before, didn't have any news. But the mistake I made was not coming back here and kind of identifying, well, what is this potential or this bounce point for the double bottom? And I didn't draw from the most recent swing low here to highs. And we bounced off the 50%, bounced off it again, and then when we came down, we didn't break the 61.8. So when I was putting on the short, the long was technically still in play, and so that was my goof. I had the full halfway back long drawn, which looked, I'll draw it over here so it's not so cluttered. Looked like this, and that was way down here at 41.0150. This guy. And that's kind of what I had my eye on, and I just goofed and forgot to draw that up. So that one stopped me out, but then I was kind of able to redeem myself because once I had that up, I left it up on the chart. So this one, the short stopped me out, and so that's a -4 for if you divide things down into 2 contracts. I keep my log on the in the dashboard. I just divide it down to 2 contracts, so it's a little bit more uniform and folks can relate. So if you're trading 4 or 8 or whatever, you can just double the contract number. But that way, at least if you're trading 2 at minimum, you can use a first target on one and then scale out. If you're only trading 1 contract, it gets very, very difficult mentally to manage your trades because you have to decide, am I going to take an arbitrary target, a fixed target, or am I going to trail my stop? It's more profitable to trail and forget the first target, but if you have 1 contract, but it can be difficult to do because you end up leaving money on the table, so to speak, when you're trailing at times, and then it can kind of wash away, and you have to be consistent and be there day after day to catch those bigger winners to offset those losers. So my suggestion would be, if you're newer to trading, start with the micros. Trade 2 contracts there so that you can get a feel for the multiple exits, and then you can work your way back up to the minis, and then it's no problem, going 2, 4, 6, because you're doing the same thing. It's just a bigger multiple with your reward to risk. So from here, this 50% retracement long, I let that 61.8 break, and then took another short. So swing high. At this point in the day, we were after the time it set up. We had solidified the 30-minute high, and so now this is really just a counter trend at highs, which also happened to be the right at the gap fill. So that short went from high to swing low. Get rid of the long. And that one set up really nicely, 41.14, and it had a pretty quick drop. So I was able to redeem myself and then some. And the way that I managed the trade, once it broke below the swing low here, I just drew my next 50% retracement like so. And then we kind of broke pretty quickly below the negative 23 and went all the way to the negative 61.8. So you could draw your first 61.8 like that, draw your retracement, and then you could draw the next retracement like that, and trail your stop above the 61.8. Or you can come in and draw the extension, kind of end up in the same place, low to low, trail the 61.8, extend it down again, trail the 61.8, and then we really started going quickly down, and at this point we were coming into the halfway back long. So I never want to leave my stop too far away from an opposing halfway back of the day, meaning if I'm short, the opposing trade is going to be a long. So if I'm short up near highs, I want to be paying attention to where is the halfway back long for the day. And I don't want my stop to be way up here above the swing low, because the halfway back of the day is one of the stronger trades or stronger levels that could get a reversal. So from that point, just coming in and trailing each candle's high, as best you can. Usually doing it by a couple of ticks. We had a little bit of a this candle kind of went up by a tick above the prior one, but they're happening so fast a lot of the times here. You're just kind of doing your best to trail your stop down. So by the time this candle even broke above the prior candle, like my stop, I'm still up here. So that one I was able to stay in on that little one tick move. And usually I'm doing 2 ticks above each candle. Sometimes 1 tick, but like I said, they happen so fast. You're just kind of hovering your cursor over the candle and then drag the price down, drag the price down. You're just kind of staring at the candles here. And then when we get in here, you have the same kind of a thing where you the high of the candle was like a 41. Let's see, 40.99. I think it's. Let me change it to candle because you can see it a little bit better. So 99.25, and then that's where we kind of jumped up above the prior candle's high. So when you're looking at a Hakanashi, it kind of smooths it out a little bit. But that one, I brought my stop down and was taken out right in this range. What was that number? Yeah, it was like a 99.75. So I got kicked out right in this little consolidation here. But you're still 15 points in a jiffy there. So went a little bit lower and then bounced from there. So that was the two trades from today, both shorts. From there we kind of went into that triangle again, higher low, lower high, and when you establish the 30-minute range and you're past the halfway back of the day, then the only trade you really want to make is two trades, short at highs and long at lows. You don't want to be playing around in the middle of the range, because that's when you get into this chop and you can end up just taking a lot of stop outs. So that's recap for today. If you have questions, drop them in the comments below, and I hope everyone has a great rest of your week. I'll talk to you all soon.